Well, I'd say that the M2M industry as a whole hasn't really elevated itself in the venture community enough. I think if you just look around at the conference, there aren't that many VC guys here with private equity funds here. In other industries, at other conferences, you'll see a lot of them. So I think that alone is pretty telling. I think when you look at M2M itself as an industry, it's pretty fragmented. There are a lot of players. There's no real clear leader out there. It's I think for VC guys and private equity guys, it's hard to understand. It encompasses a lot of different factors, platforms, technologies, etc. But it's when you boil it down, it's really it's really a sort of a vertical application. You've got a lot of different verticals that you're operating in, be it energy, healthcare, fleet management, and they're under-penetrated markets, and it's and there are some pretty interesting customer plays there. And I think that the perception hasn't really played out enough yet in the VC community at this point.
You guys have a reaction to that?
Yeah, I think that Todd makes a very good point. The reality is that I don't think, other than the suppliers in the room here, that too many people here are actually thinking of M2M applications even. And the application side is no different to the venture investing side. You're here because you're interested in integrated healthcare applications, improvements in smart grid services and utilities. You want to drive efficiencies. Efficiencies have green and clean implications. And it's the integration of those complete applications and services that folks are investing in, because they've got reliable, demonstrable, and hopefully viable staying power to end up with an exit strategy which makes sense for the investors. And so I think in many ways we still struggle as an industry to wrap our arms around the notion that there's this umbrella called M2M, which is in effect a mechanism of just moving data to enable many of these applications. And actually talk the language of the user community, and as a result talk the language of the investor community, where you're looking for very specific, my recommendation anyway, very specific expertise to come to you as a result of the sources of money, not just the source of money.
That kind of segues into our next question, which I'd ask any of you to grab. What drives interest in M2M most? Is it the market size, the competitive landscape, the uniqueness of the company, customer advocacy, or is it sort of a follow the herd mentality, which we haven't seen any big herds, but maybe it's follow the lamb?
You're talking about it from the point of view of investment?
Correct.
Oh, without a doubt, follow the herd. I haven't done quite as many as Jeff, but I've done 3 startups, and the nice thing is that all of them have worked. The bad news is I haven't had a failure in one of them, and you learn more from failures than successes. The reality is that when you go to those marketplaces, you can knock on a door and knock on a door and knock on a door for 5 years with a great idea, but if it comes up on the Wall Street Journal as a front page, you've got 5 people knocking on your door wanting to give you money. Whereas just recounting a little earlier, that I was looking at an investment opportunity that was given to us in probably the last 3 weeks. And strange to relate, the entire presentation, the investor presentation, was now focused on smart grids. Why? Because everybody's talking about smart grids. If you put 10 people in a room to define what a smart grid is, even the people that are involved in that industry, you'll get 15 different definitions. But there's still money going to be poured into that space. So the herd is number one for Medicare.
There's over the last 7 to 10 years, even Peggy Smedley and I have had this discussion for years about, is M2M a technology or is it a market? What's the definition of a market? It's a place where people go to buy and sell stuff and exchange stuff. And, 500 people doesn't make a very big market. And so the question is so what happens? Well, historically, you can look back. If you look at some of the ventures that I've been in the early 90s, I started an internet company, and that wasn't a market either. It was a technology. It's called the World Wide Web. But it developed rather quickly into a large number of very successful markets. And so the question mark is which one of these sort of verticals that have been described here become in themselves a market? and what's the underlying technology, platforms, capabilities that are going to be needed in order to be the catalyst to drive that. And in fact, what you see is a lot like nanotechnology. Most of the people successful in nanotechnology didn't build stuff, like nanoparticles. They built tools. And that was the market at the very nascent stage of the nanotechnology market. In the same way, if you look at the investments that I've made in both my time and my money, that those are really in infrastructure currently rather than necessarily the market, the vertical markets themselves.
Let me ask you all this. You guys can hang out at the mic so everybody can hear me. Does the M2M model necessarily match up with what VCs are looking for in terms of an exit strategy, in terms of a timeline, in terms of an X multiplier? I mean, are the two on the same page? Is there enough of a recurring revenue model in these things, or are we talking about something that's not really applicable to the VC pool that much in the first place?
Hey, Steve, your microphone's not working that well.
Yeah, it's in here.
I think you got to find the right company. And I actually asked a friend of mine who works at an investment bank who covers the sector for transaction comps over the last, for last year. I guess there were about 13 M2M deals, M&A deals in the space. And going back about 3 years, there was about 2.3 billion of value in deals that he'd identified. And he only had, valuation metrics for about 20% of it. So there's definitely M&A activity. There isn't a clear strategic buyer in the space, which I think is the biggest hurdle when making new investments in M2M. Typically, when we take a position in a company, we want to have a pretty clear exit path. And absent that, it's hard to get those investments done.
Alex, Diana, go ahead.
Yeah, just to build on what Todd's saying, I think whether it's M2M, biotech, IT, clean tech, I think there's just certain rules of thumb that each venture firm follows, whatever they might be. So, you're looking for good companies. I think some of the things that maybe are challenges to M2M companies as they relate to things like energy and water are the slow adoption rates of customers. That's probably, for clean technology, the biggest risk that we see among companies. So even if you've got 5 million in sales, how do you scale to 10 to 20 to 30 to 50 in a reasonably short time frame? So you have to have large markets, but what we've also focused a lot of our time on is what's the economic value proposition and is it felt in the near term? So we're looking for companies, whether they are using M2M for building controls or energy efficiency, that are delivering a 2-year or less payback to the customer, and preferably less than a year. Those are the companies that are going to be able to scale quickly and be able to grow in the size increments that a typical venture firm is looking for to go from the 5 to 10 million to 30 to 50 million in a 3 to 5 year time frame.